What's up, everyone? Welcome to the Akuma Fund. Today we'll be discussing my portfolio and some adjustments that I've made to it, and some changes and some buys and some sells. So without further ado, let's get started. Just this past, very recently this week, I transferred over $600. I added that to the account. And as you can see here, well, I guess it hasn't registered yet, but if you go to here to the positions, I sold my Tesla and I now own Apple. The reason why I decided to sell my Tesla stock is, quite frankly, I just wasn't well versed enough in the automotive sector to truly understand what Tesla was doing, how it was affecting the automobile industry. I didn't understand enough about any of that. So I decided that since I'm investing in something I don't know, I'm up on the position 20, 25, 30%. So I was like, you know what? This breaks some of my rules. I have to understand what I'm investing. I thought I did. I had a conversation with someone who knows very much on the topic, realized that I didn't know anything about it. So what I decided to do was sell my position, take my profit, my 25% profit on it, and I put that into Apple stock, and I transferred over some more money, and I bought more Apple stock. So as you can see here, right here, my Apple stock, if you look here, its current value is $1,236. I own 7 shares with my cost basis at $179.88, which is a great start for me, because when I started investing, I was thinking about buying Apple and it was at $190, so pretty good. Dividend yield's not good. PE is about 15 right now, so I'm very happy with this Apple at this price. I'm probably going to continue to buy Apple throughout the rest of this month, next year, and the next year, and the next year, next year, as long as it stays around this price or around the same PE. I'll be loading up on the stock, because if we go to I love Fidelity. I freaking love the research tools that Fidelity gives you. So awesome. Give it a sec. Here we go. So as you can see, here's the 1 year long chart of the stock, getting it at a pretty much below what normally would go for. Happy with that. But check this out. Look at the annualized dividend year-over-year change. 10%, 10% increase, 10% increase, 10% increase, 15% increase. Look at that dividend growth rate. Simply amazing. This is insane to me. Super duper duper sustainable, obviously at 25%. Huge buyback program going on. People always talking about, Apple's. I think a lot of the stuff that people are getting worked up about, the lower iPhone sales. I mean, I don't care about the units sold. I don't care about the revenue. I care about the profit, and Apple is just increasing its profitability like crazy. EPS is going to look crazy good over time because they're literally hundreds of billions of dollars of share buybacks. It's a no-brainer, honestly, for me. I understand the company very well. They have such a simple business model, right? They sell high-value consumer technology items, premium luxury, exceptionally strong brand, great ecosystem. I personally use it. It's weird. I use a Windows built computer, but I do have a MacBook Pro. I have an old iPhone 5s. So I understand how Apple makes its money through services. Growth is looking well. MacBooks are staying about stagnant, I believe. iPads are declining in sales. iPhone is stagnant or declining. Services is growing heavily, but ultimately all that stuff, even if all of that stays the same, that doesn't change the fact that they're an exceptionally profitable company with a crazy healthy balance sheet. Let's see if they have anything here. I mean, we might be able to just see if we can check here in the financial statements. Yep, here we go. So if we go here to current assets, look at that. So here's 2018, $131 billion in current assets. Just like crazy. Just look at this, $365 billion of assets. And in straight up cash, they have $66 billion. They have $365 billion of debt. So if they wanted, okay, well, let's look at cash. They've got $66 billion in cash. They've got $93 billion in in long-term debt. All right, and then they have some long-term liabilities. They are. Look at this balance sheet. It's just amazing. Obviously, let's see here. So they have, assets more than covers their liabilities. They're exceptionally profitable. They have enough cash to just throw money at share buybacks. If you look at their, where is it? Oh. Good valuation, great balance sheet, profitable as hell, huge share buybacks, world class, literally the premier world class company, ran by an exceptional team. Tim Cook, who else is there at Apple? Johnny Ives on the design end. They've got an exceptional team. They've got like an Apple University that keeps, because one of the problems is that whenever these founders like leave or pass on, the company starts to become diluted, right? And it starts to lose its main mission. Apple is a company that has held its main mission since the beginning, when Steve Jobs came back. I'm not exactly sure of the date, but after Steve Jobs came back, they kept their core ideals close. With 5G coming, also that might boost sales and all that stuff. But ultimately, I don't care because I trust the company. They're ran really well. It's one of those companies that I don't feel like the need to babysit, because it's ran like a freaking, it's a race car. It's, it's a race car mixed with a F-150. Anyways, if we go back to portfolio. So we go back to my other positions. I'm down on everything currently, which I'm fine with, because a lot of these two plays here, AY and AT&T, I don't buy these stocks for share appreciation. I bought these stocks for income. So as you can see here, I've got about 1,100 in AY. I'd like to increase this. I've decided to turn off dividend reinvestment for AT&T. So I'll get $50 every quarter deposited into this money market account that Fidelity has, which I think is awesome, because basically the money won't lose value, right? So that income can just feed into here, and then I can use that to buy more Apple stock or AY stock with my next share purchases. So I decided to turn off dividend reinvestment for this. AY's dividend will be coming pretty soon, I believe on the 15th or 16th or 14th, along there. So I'm just enough to purchase one new share every quarter. Very happy with that. But the main thing here is I sold Tesla and I decided to buy a lot more Apple stock. Yes, if we go here to analysis, this is one of the pages that I think is very interesting to look at, and one of the other reasons why I like Fidelity. This is a little off here. I was hoping that this would update, because I'd like to see my new stock allocations, but it hasn't updated yet, probably because the money that hasn't settled directly from my bank account just yet. But according to this, I'll probably have maybe 25% in Apple, 20% AY, and then maybe like I don't know, maybe like 45%, maybe 25%, and 30% or whatever. It probably doesn't even add up to 100, but I decided to turn off my dividend reinvestment for AT&T because it's really freaking big. $3,000 for a position is quite large, and I put, as time goes on, I don't really want a position to be more than 5% of my portfolio. So if AT&T at its current size, right, is not supposed to be any more than 5% of the portfolio, that means I'd have to have a portfolio of 60 grand. So that AT&T wouldn't be such a huge holding of the portfolio. So I just decided to turn off dividend reinvestment, use the money elsewhere, and just use the money I get from AT&T to fund other investments. Obviously, $50 a month is not much, but it's enough where, let's say I get paid or something, and I'm transferring over transferring over $600 like I did this month. I'm transferring over $600. Oh wait, I have an extra $50 on top. I can buy maybe an extra 2 more shares of Atlantic Yield. Maybe that just makes it just enough so I can buy 1 more share of a higher priced stock. But yeah, I decided to turn it off. As for the watch list, interesting things I've noticed is that a lot of the materials companies like BHP and what else is there? Where's SQM? Here it is. Two materials companies, they had huge jumps yesterday, probably on the news that the China tariffs are over. Let's go to the 2-day chart. I just want to show you guys yesterday. Here we go. Where is yesterday? Is this yesterday? So yeah, it jumped up from so no. Let's go to 1 month to make it clear. It was at 44.50, and then had a huge spike after the news about China, and it's continued to correct a little bit, but it went all the way up yesterday to about zeros. Went all the way up to 40. Look at that, almost $47 per share. This had a huge spike on the news from China. If we go to SQM had another huge spike right here. You see this one there. Had another huge spike on the news from China. Up this day, 43 to 45, up about, what is that, 5%. So the materials sector really had a huge boost on the China news, on the tariffs being lessened. Probably because obviously China imports just a massive amount of raw materials. Just a freaking beast when it comes to producing stuff. Some other interesting things too I'd like to mention on the watch list. I was considering buying some Lockheed Martin, because look at that. Lockheed Martin hit their 52-week low pretty much today. They ended at 286, but I saw them whenever they're at 283. I was really considering, maybe I should buy some Lockheed Martin. Decided against it. Speaking of which, I wonder what the current dividend yield is on this Lockheed Martin stock. There we go, 2.97, so just under 3%. Wow, look at that dividend growth. Whew, that's some sick dividend growth too, man. Wow. Anyways, Lockheed Martin was down a lot, just hit its 52-week low. If you look at it in the 5-year, yeah, look at that. That is something. I think it just, people got too excited over the. People got too excited on the what is it, the F-35 contracts and all that stuff. But they're going to be quite profitable later on. Goldman Sachs hit another 52-week low, I believe. Yeah, look at that, 52-week low. Dividend yield at 1.67%. Another one with pretty good dividend yield. Just interesting market right now. I've decided that I'm gonna just focus hard on Apple, and Lockheed Martin is another potential. But I want to double down on Apple. Because I just think it's one of those. I think about it kind of like Warren Buffett's Coca-Cola stock, right? Warren Buffett bought Coca-Cola. He just figured, you know what, it's at a fair valuation. They're quite profitable. They're gonna grow their dividend over time. Like, everyone's gonna drink Coca-Cola in 50 years. So obviously he analyzed the company and did much more in-depth analysis than that, and then decided, okay, I'm gonna buy massive tons of this stock. Time goes on. I was using like 50% on cost from those buys back then. I feel Apple is a company that has the potential to do that, quite frankly. They're exceptionally profitable. Once someone buys an Apple device, they more than not never look back. As the world continues to develop, there'll be more cash on hand to buy more Apple products. For example, in the Philippines, it's actually a status symbol to have a new iPhone, because most people have Android phones. So whenever my friends in the Philippines, they get their first jobs and all that stuff, they all buy iPhones. They don't buy Nexus. They don't buy Samsungs. They buy Apple, because Apple's brand is that good, and they're doing everything to keep their brand strong. One of the things that people do whenever they like, a lot of companies will cash out on their brand. right? I think Victoria's Secret is a good example of this, of like lowering costs, destroying the brand image, creates a lot of revenue and profit in the short run, but in the long run, the brand isn't premium anymore. It doesn't have that want. The people don't want it as much. Apple does everything right. When unit sales are down, they don't go, okay, we're gonna lower the cost of the iPhone to increase unit sales. They say, you know what? Unit sales are down, so you know what we're gonna do? We're gonna increase the price of the iPhone. That's the right kind of thinking, and that's a great business decision. I'll be continuing to buy more shares of Apple. I wouldn't be surprised if maybe this is the only stock I buy for the entire year, as long as it stays at like a good valuation. Wonderful company. I appreciate you guys for watching and hearing this man rant about dividend paying stocks. Thank you very much for watching. I'm out.